to a smaller investment bank, and I started doing Series A equity financing for small businesses. That's early stage, $3 to $10 million equity raises. And what I found when I was doing this was a lot of small businesses struggled with the capital raising process. It was their first time approaching sophisticated institutional investors, and they struggled with their financial projections, with investor presentations, and with business plans. So I actually launched a consulting firm, started as a sole proprietor to help companies with capital raising in the Series A equity financing realm. Now, here's what I discovered while I was doing this. We started the process, we started getting investors interested, we started going through due diligence, and all of a sudden I saw several deals collapse. And when I looked into why, it was because some of my clients had terrible financial statements. So I looked into why this was, and a lot of small businesses are set up with a bookkeeper and an accountant that shows up once a year to do taxes. But who's helping in between? Who's helping give advice with cash flow, with how to grow the business, cash flow planning, and other metrics? And as a small example, when we went through the capital raising process and due diligence, they would have a story like, we have invested $200,000 into research and development, and you look at the balance sheet and it's showing us zero under intangible assets. So when you have an accountant that shows up once a year to do taxes, they're not necessarily asking you questions to ensure the financial statements are accurate. In fact, if you read a notice to reader statement and waiver, it actually states that the accountant relied 100% on management and did not verify any information. So the accountant that shows up at year end is actually not even responsible for ensuring that your information is accurate. And typically the CFO is the last executive position that gets hired. Most of my prospects that I speak to will put money towards operations, sales, business development, but accounting is one of the last places to put it in. Now, is it the most important place to put it in an early stage? Definitely not. But I'm here to talk about what could possibly happen if you don't invest in accounting early enough. So the conclusion was, what I was finding was that poor finance and accounting was the reason why a lot of companies were not getting financing, whether it was bank financing, to BDC, through equity. A lot of times the stop was, your financials are not strong, you don't have good accounting. So what was I doing? I was referring accounting firms, and I was helping companies hire accounting people. Now, that would mixed results, because I would farm out to an accounting firm, or I would hire a controller to take over, but they don't report to me. So I have limited control on what they actually do. And what I found was that years later, a lot of times, they hadn't improved the accounting, it wasn't the way that it was supposed to be, and so I realized that there was a problem. Now, what was my motivation to launch into accounting? Number one, I wanted to take control of accounting and make sure it gets done right. And that means hiring my own people and having control. But also, a lot of people are in project-based businesses that start and end. So you finish a bunch of projects and you have nothing to work on afterwards. I wanted a recurring revenue stream. And the way to get that was with monthly accounting. And that's another reason why I got into the business. So here's what I discovered. Most entrepreneurs are not accountants. Like, most of you have a passion, you want to start a business, you have a vision to create a product or service, but you unnecessarily get thrown into cash flow planning, bookkeeping, things that you don't want to be doing, that you're not necessarily strong at. And a lot of accountants, they don't get the advice they need to grow their business. How do I hire my first employee? How do I hire my second employee? How do I pay myself? Should I pay myself a salary? A lot of these questions don't get answered at a very early stage. So the gap that I found was in this space in accounting, and I have morphed now. Fast forward the clock, we are now a full service accounting firm, and I'm hiring my 8 staff in April. And the accounting revenue has eclipsed my capital raising revenue and my CFO service revenue. So I want to arm everybody here with a few tools on how to get control of your accounting. But the very first question that needs to get asked is beginning with the end in mind. When I start an engagement, I often ask entrepreneurs, why did you get into the business? What is your goal? And it's okay to say, I became an entrepreneur because I want to make money. I find a lot of people feel like they have to have some sustainability factor or say they want to make the world a better place. That's not necessary. If you got into business to make money, that's okay. But if somebody says to me, I want to run a low-risk business and just make enough income to support my current lifestyle, versus an entrepreneur that says, I want to max out and sell my business for $30 million in 3 years, the advice I would give to those two individuals would be completely different. So it's important to start and know what is your ultimate goal, what do you want to do with this business? Because if you bring in business partners, equity partners, you want people to be sharing that vision as well. And then the last question I like to ask is, what do you want to pay yourself personally? That doesn't get asked a lot. I have a lot of clients, when I first start with them, they don't even pay themselves a salary, and they haven't thought about what salary they want to make, and when do they want to start making it. So when it comes to resource planning, a lot of people that I work with are looking at hiring employees to grow their business. And the other question I ask all my clients is, what do you need to be doing as an entrepreneur? What is your superpower? So if you look at all the different aspects of a business, there's branding, marketing, business development, developing content and products, consulting, managing operations and staff. For my particular business, I decided that I had to do sales and business development. So that is what I chose to focus on. So my first staff that I hired was an accountant. And as you grow your business, you want to be making sure that you are fully focused on what your strengths are and hiring around you on all the other areas. And that's how you can effectively grow your business. Now, if you're looking for financing at an early stage, there are limited options where you're at. The easiest place to get a loan is through the BDC. The federal government, their mandate is to be supportive and help small businesses, so it's different from a bank that's a profit maximizing firm. But the BDC comes with strings attached. At an early stage, a lot of them require personal guarantees. So a lot of times I have my clients say, well, why don't I just take out a personal loan or leverage my house because I'm going to get a better rate and just loan that money to my business. So that is another option for you to do. You can raise seed capital through friends and family. I have many prospects that have written business plans and done short projections in order to raise money through friends and family. There's crowdfunding. You can run a Kickstarter campaign and launch a product on Kickstarter. Or you can bring in an equity partner to share expenses. One of the ways that some of my people have gotten creative and hired key people. So if you need a key marketing person that has a $120,000 salary, what you can do is pay a below market salary and cover the rest with equity. So in this example, listen, I can only pay you $80,000, but I'll give you $40,000 of equity as a top-up so that you own a portion of my business based on whatever valuation you guys decide on. So there are creative ways at an early stage to bring in key equity partners and key employees at a high level. Now this is the homework for everybody, and people that don't know. Yes, there's homework here. And what I want everyone to do is to try this exercise of building your own forecast, building your own P&L forecast. So the first step is a sales forecast. And now, a lot of people question of whether this makes sense or not. But from my perspective, when you have a sales forecast and you build a budget, you actually set goals for yourself, and all of a sudden you've got benchmarks that you're working towards. And running a business becomes a lot more meaningful than if you're running without a roadmap. So the first step is a sales forecast. And the first step is, what's your current sales and marketing strategy? Well, for me, I'm the key salesperson, so I'm smiling down on myself, and that's my sales strategy. You could have a digital marketing campaign strategy. But what you want to do is make some assumptions about what sales can be generated through these activities on a monthly basis. So I give this example of my sales funnel. Every month, I want to make sure I reach out to 20 contacts. I want to have 5 conversations. I want to do 2 proposals, and I want to have 1 client. And I track this every month. If I don't land a new client, I go, where did I fall short? Did I not make those 20 contacts? Did they not turn into conversations? And once you do that, that you start setting these benchmarks, and you're going to start seeing much better results. So that's step one, is creating your sales forecast. Now you have a 12-month sales forecast based on all the new clients you're going to bring in. Next is calculating your gross profit margin. The gross profit margin on a most simple basis is your price minus any variable cost to deliver that service. So if there are any expenses that fluctuate quite directly with your sales, they are likely variable costs. If you have contractors that do contracting work, that is a variable cost. You spending time is a variable cost. So I consult a lot of companies, and their profit margin is sometimes like 100%, and it's because the CEO is doing the work as the consultant. I think for this exercise, you need to put a market price on yourself, on what you would cost on an hourly basis, and plug that into your gross profit margin. Because there's an opportunity cost for you doing that work, rather than focusing on growing your business. So other variable costs, travel, delivery costs, contractors, value of your time, materials and content as examples to calculate your gross profit margin. And then you're going to come up with a percentage. You're going to say, well, on average, I make about a 30% gross profit margin. If you have multiple products, you can map out several products and have different gross profit margins as well. Once you have your gross profit margin, so let's just say for the argument this 30%, then you want to pull up your profit and loss statement and pull up your fixed expenses. Your fixed expenses are expenses that don't tend to change month to month, no matter what your sales are. So it could be insurance, it could be your monthly rent. So you plot that out, and you take your latest month, and you start thinking, okay, as I grow my business, what expenses am I going to need to add? Okay, I know I'm going to have to hire an HR person at some point. I know I'm going to have to upgrade my software. So you map out what the fixed expense growth looks like. Then you have a full profit and loss 12-month statement. You've got a sales forecast, a gross profit margin, and what you expect your bottom line net profit to be. Once you set that up, you now have a full forecast for your business that you can map out and plot next year actuals. So now you've got a reason to do monthly financial statements. So you will proceed to do monthly financial statements. You put your actual, you put your budget, and if there's any variance, you can investigate why. Why didn't I meet the target that I set based on the projections that I had? I guarantee you, if you guys go through this exercise, you're going to be a lot more motivated, and your business is going to be a lot more meaningful to you, and you're going to be a lot more excited to get up every morning because now you have goals to aspire to. I've got a slide here for evaluation. Okay, I think the time for 5 minutes left. This slide really is for people that are at proof of concept, growing, and looking for Series A equity financing. So I have this up here in case people have questions that they want to ask about this. But I thought I would pause here and see if there's any questions. Does anyone go through that process of doing a forecast? Has anyone done a forecast? Great. Could you tell me a little bit about your experience with the forecast?
Well, I worked in several large corporations, and when I started my first startup here in Canada, bringing a product out of Brazil, I had, it's a similar market in size and plenty of clients. So I forecasted based on the numbers they had, their closures and stuff like that, to create the plan for the company here. Unfortunately, COVID happened, and nothing happened in my forecast.
Thank you, Mario. The other thing I'll quickly mention too, if you are currently a sole proprietor and working alone on contracts, if you notice that you're getting a lot of questions asked about another service, so if you're a photographer and you're always getting asked, do you know a videographer? That is keys a decision in your mind, like, okay, I have this funnel for videography business. Maybe I should hire a videographer to grow my business. For me, it was, I'm consulting and doing capital raising, but everyone keeps asking me about accounting services. So I'm naturally creating this funnel for accounting, so I knew this was an area that I need to get into and start plugging. Anyone else have that realization that, I provide the service and people keep asking me for this other service that I'm just farming out to someone else? Does anyone have any feedback on that?
For commissions. For commissions, no issues.
Yeah, okay. So you're happy to take commissions? Yeah, and that, I consider that as well, was a referral program. But there are two avenues to go. There's commissions and there's creating the entire service yourself.
So I met my SEO specialist when I first started the company. His name's Alan Pollitt, and so he helped me with SEO for our website, which ranks very well, by the way. And so I was sending him a lot of referrals, right, through websites and stuff like that, but like following up with people is not his strong suit. So I'm like, well, I'm sending all these people, right, and you're not following up. So we have a partnership now. So then, the websites, I have a different copywriter, different developer, he does the SEO, and I work with the clients. So.
Excellent. Thank you for sharing that, Tammy. Anyone else have experience with forecasting that they want to share, or anything that I've discussed? Questions even? Andrew?
Yes, actually, that's what I offer my clients, budgeting and accounting. And one portion of what we do is forecasting, comparing actuals to what we can do in the future based on certain variables so that they can predict what their income or what their future could be like based on certain variables. So it is extremely important for all business owners.
Thank you, Andrew. And I honestly, I find a new sense of purpose. When people go through this exercise, they feel a lot more excited actually to work on their business because now they have a roadmap. They actually have a goal to aspire to.
So, to answer your question, I think I just added is basically we were doing a lot of epoxy for a brick painting company, but then after we were basically subbing it out, now we're working on bringing that in-house, and so it's a process, but I think we'll be a lot more profitable. Obviously, give a better service to the client as well.
That's excellent, Neil. Thank you for sharing that as well. And maybe, do you want to walk a bit through your budgeting process? So obviously, if I want to get into this business, I'm going to have to think about branding. I'm going to have to think about hiring people. What was your thought process as you were budgeting and figuring out whether it made sense to do it or not to do it?
Yeah, so basically it came down to we're basically adding on a small margin on top of whatever we were selling, and now by bringing it in-house, obviously with the material costs, we're able to control that a little bit better, and also with the quality, we're able to see, one of the challenges also is just making sure our labor knew what they were doing, but once we got over that hurdle, it just became a lot more efficient.
Thank you, Neelan.
Hi, good evening, everyone. So, my company sells software. We're also an NetSuite partner as well as so, and part of what we sell is financial assistance, or not financial assistance per se, financial automation. So for us, it came very naturally for us to let's start using what we're selling. And as a result, we got really granular with our forecasting and our budgeting. It actually allowed us to map out our spend months in advance, and based on if I have certain targets to achieve, what are the activities that I can start doing today to start achieving those targets. So that's the point number one. And the second point is about an ancillary service. So because we sell ERP systems, one of the questions we got asked a lot about was payroll. So we actually went and built ourselves for Canada for next week. That's what we do.
Thank you, Shirag. And of course, when you're launching a new product, there's always risk with CapEx. Sorry, are we running out of time? Okay. No more questions. Okay. Unfortunately, I'm getting cut off here. I'm getting dragged off the stage. Thank you, everybody, for all your participation.